Also joining me is Big Market Voice Sunil Subramaniam. Sunil, it is a pause, yes, but the markets were hoping for a dovish pause. Doesn't look like that, given the fact that the governor has not really tinkered with growth forecast, notwithstanding the external risks that we are facing. Uh, what is your thought? I mean, markets are disappointed. I can see that markets are in the red, of course. So Nifty is down 70 now, almost 0.3%. But how would you look at it from a market perspective?
So first of all, yes, the markets are disappointed because, like I said, 25% of the market had built in a rate cut, 50% of the
Hmm.
market had built in an accommodative stance. So from the market already relies on expectations. But if you look at, and I was in the rate cut camp, before the policy speech occurred. But hearing the policy speech, right, the first thing I have to say is that the RBI governor has to be a slave to the data. Now, you mentioned
Hmm.
that he has retained the growth guidance. He has retained. It's not that he has retained. The economic data are retaining the growth forecast. It's not the governor or the MPC committee which decides on the growth, right? They look at the data. And what the data is telling them is very, very crucial. So I think if you look at it, everybody is talking about, oh, they have downward revised the inflation forecast for the current quarter, current year. But that's not it. The rate cuts and the policy stance are for the future. And if you look at it, right, there is a U-shaped growth in the inflation. It's actually peaking to 4.9% next year. Now, what are the causes
Hmm.
for that expectation? First is that he discounts food prices because they are volatile. See, a good monsoon means good food prices is not necessarily a given. Take last year, for example. Monsoon has to fall at the right time in the right places. You don't want monsoon in the time of harvest. You want it in the time of sowing.
Hmm.
You don't want it in the cities. You want it in the villages. So just from that point of view, I think he's being very, very balanced to just say that, oh, this continuing food low prices, cannot sustain forever. And they put in a normal factor to that. And hence inflation looks at 4.9. Now at 4.9 is above their comfort zone. So how can you expect to do a rate cut? Second, what I was also a bit surprised with that the global uncertainty, he says, actually has eased. And he's
Yeah.
this tariff. See, the market is very near term in its outlook. Yesterday night, Mr. Trump's tweet is what impacts the market. But the governor has got a longer perspective. So he's looking at the fact that India has a 2% share of world exports, right? And 20% of our GDP is linked to external factors. So to that extent, right, the global uncertainty, while there's a headwind, he feels that even at a 25% tariff, which is currently on the anvil, Indian economy can survive and grow. And that's why his growth
Hmm.
forecasts are steadily above 6.5. For next year, first quarter also at 6.6. So if growth is steady at 6.5 and your inflation is rising, then there's no case for a rate cut. And one more fact. He mentioned that transmission is actually happening quite decently, 77 basis points out of a 100 basis points cut. And I suspect it's a
Hmm.
bad go through in this festive season. So I think he sees no worries about transmission. See, that was one of my main concerns before, that will the RBI governor, having front loaded the rate cuts, will he now seek
Hmm.
to do something to boost transmission? But his data is telling him that transmission is very happy. Now, what's all this summarized to? That the horse is being taken to the water, but the horse is not drinking the water. That's the Indian consumer. So the Indian consumer has got a 1 lakh crore giveaway from the tax government. They have got rate cuts coming in. EMIs have been cut. That's what he said. Weighted average rates have come down, and banks are chasing them, but they are still not willing to go and borrow. They are still preferring to save. So you see, banks' CASA balances are
Hmm.
rising. HDFC Bank got double digit, 16% growth in their deposits, right? They're preferring to save. SIP books are continuing to grow. So the Indian consumer's mindset, the RBI governor can't change. He's made everything
Hmm.
supportive for that, but that consumer has to go down and spend. And that's where I believe that with this season coming, I think the balance of the transmission will go through. There will be what do you call, in Hindi word is maramari. There will be severe
Hmm.
competition at the consumer durable counters to win the
Hmm.
customer. So manufacturers plus banks and NBFCs will give a very good package of EMI to borrow and to buy things. And I think that will play too. And I think I suspect the RBI governor thinks that, because his opening remarks were about how festival season is coming and all that.
Yeah.
So what
Hmm.
the RBI governor is saying, I've done all that I could. I see the steps happening. That final consumer is not consuming. Government is continuing to spend on capex. Services exports are growing strongly. PMI services PMI is about 60. So it's all going
Yeah.
right. So let me wait for the festive season to see if it translates. So now October 1st policy, again no change because 23rd October is Diwali. So before that you won't really get a sense. So I think the
Yeah.
January policy, if all of these efforts fail and you still see consumer lagging, and then Mr. Trump's tariffs have come in, that's the time he will
Hmm.
do a think on the strategy. Otherwise, for me, next
Hmm.
also no rate cuts. We'll wait and observe the situation. And January, we should actually not hope for a rate cut because I want all the RBI steps to succeed and the Indian economy
Hmm.
grow to consumers to pick up. So I don't want to pray for any more rate cuts. I now want the economy to pick up based on all these injections. So my thing is that I think the governor has done a very good job of balancing and putting out the facts. And I think it was not a decision taken by the MPC. It was a decision taken by the data on hand.
Hmm. Sure. You alluded to the fact that, of course, the governor also started his speech by talking about the festive season. One question I was asking my colleague Hamsini as well. The cost of funds for NBFCs haven't really gone down yet. So, a move to extend EBLR to NBFCs, do you think that's the need of the hour? Because, of course, the demand for credit will also go up as festive season kickstarts this month itself. That should have happened by now, right? Or that'll the RBI should be doing that pretty soon, if not already.
But why are we depending on the RBI? See, ultimately, lending rates are market-driven force, right?
Hmm.
NBFC will want loan growth, and they will set their rates as per the market demands. So I'm not so sure that RBI has to take everything decision, changing NBFCs to bank-like structures and everything, right? I mean, it would be welcome, but I think that ultimately, if NBFCs want to win in the marketplace, they have to take their own commercial actions. And I think that this festive season will see that. See, already you're seeing in some bright spots, right? The two-wheeler sales are picking up.
Hmm.
You're seeing
Yeah.
FMCG counters saying that rural demand is picking up. There is some green shoots. So I would say that it's a bit early. Let's wait for the festive season numbers to come out because you remember one thing: there's going to be a huge amount of stocking at all the dealer points, whether they're automobiles or durables and all of that. So we're going to see the index of industrial production go up because everybody's going to stock. The point is that the stock has to
Hmm.
ultimately go to the hand of the customer. So you see, that's the million-dollar question. So I think that while RBI seeks to make a more level playing field between NBFCs and banks, and they will push towards that, it's not really the determinant factor. I think market forces ultimately will make NBFCs take the right decision. And from their cost of funds going down, see, I'll tell you what, if you look at it from a perspective of the markets, banks who are
Hmm.
lending to NBFCs would rather lend to the customer themselves than give cheaper loans to NBFCs. So, right, when you get a rate cut option, a bank would rather go because banks are today as big retail
Yeah.
players as NBFCs. So, why
Exactly.
should they go and
Hmm.
help another competitor in that, right? So, to the extent,
Hmm.
NBFCs have to rely more on market borrowings rather than on loans from the banks to really get that. But second is that I think NBFCs can operate at a thinner margin than banks
Hmm.
because they don't have that kind of a
Hmm.
huge infrastructure. They're much more digital. They're more at the counter. So I think that NBFCs will thrive without even this happening. And I'm remain hopeful that the festive season
Hmm.
should see the tipping point in the mind of the consumer. He's got tax
Hmm.
breaks in his hand. He's got EMI. He's got a festive season coming up. So I think that let's keep fingers crossed and hope that the festive
Hmm.
season tilts the balance in favor of discretionary consumption.
Hmm. Okay. That's the way. So you will you be betting on two wheelers, etc. Now ahead of the festive season? Of course, they've already started picking up traction. Sunil.
See, I'll tell you one thing that these are all top line numbers that we talk about, right? I want to see that what level of discount are they offering? Are their going margins going to be under pressure for the volume? Now, I
Hmm.
would say yes, they should sacrifice margins to build volumes because it will have, from a market participant perspective, it will give a boost to private capex as capacity go up. But on
Hmm.
those companies themselves, if they are going to do a loss on these fresh sales, right? Then obviously their
Hmm.
EPS numbers would not reflect that. So I would not correlate top line growth in two wheelers or consumer durables straight away going and
Hmm.
buying those stocks because I want to see what price they're selling it And how does it affect their EPS growth? Because the market relies on EPS. But the top line
Yeah.
growth in this would help private capex pick up. I would rather go buy
Hmm.
private capex because there the order books will go up, and there's a wide range of industries that are going to benefit of that. So I will, hold my horses as far as directly these auto or consumer durable companies are concerned, and wait for the margin numbers to come out, which you'll only
Hmm.
get. Some of it will come in October, but if you see Diwali is 23rd October, so it's the January
Yeah.
result which will give you a sense of how did these companies actually do the sales. Were they like burning
Yeah.
the costs and doing it, or were they able to
Hmm.
do it on a profitable basis? Let's wait and see for that.
Okay, fair point. Aditi, I'm coming to you now. The bond markets were pricing in at least 60% participants were pricing in a rate cut in September. Do you think the bond markets are disappointed? A, and secondly, uh, 10-year yields had risen somewhere around 10 to 12 basis points since the last policy. Uh, now with the RBI maintaining status quo, would you expect this to anchor short end rates and could that lead to a flattening of the yield curve, so to say?
I think only minorly. My sense is that most of the bond market was probably expecting a pause today and a cut only maybe down the line.
Hmm.
And With the pause today, I don't think that there's going to be too much that is going to change. In any case, the hope of a last rate cut only if the market becomes convinced that it's imminent. Do I expect that the rates will come down? For the time being, I think we'll be plus minus 5 basis points of where we were yesterday.
Hmm. Okay. And what about liquidity? The system liquidity right now, as per the government, is 3 lakh crores. With rate transmission broad based, do you think the RBI will maintain these levels or they would look at reducing it a bit here on? What's your sense?
My sense is that it's actually gone up a little bit in the last couple of weeks, probably because of government spending, and some of that frictional stuff will keep happening. Right now, of course, we're in the middle of the monsoon. We have a couple of months more of the monsoon ahead of us, and again, capex picks up in volume terms after that. And next month we'll be back in the phase where the advanced tax, etc., money is coming in. So a lot of the frictional factors will continue, and CRR cut will come in Q3 as well. So let's see, what level of liquidity the RBI is going to be comfortable with maintaining in the interim.
Hmm. Okay. Aditi, I also have another question that's on inflation because, sometime next year we have a new inflation series also that will come in. Is it really possible to actually, forecast inflation for the longer term reasonably now? Because food weightage, of course, will go down by a few percentage points. So, how do you really assess long-term inflation over the next 9 to 12 months, so to say, once it kicks in?
No, that's not long term. That's medium, not even medium term. I thought long term you mean like the next 5 to 10 years, which is like the kind of crystal ball gazing economists are asked to do. So,
Hmm.
again, I'll start with the crystal ball gazing first because that's probably the easiest to address. I think with the way that Indian demographics are expected to keep domestic growth and particularly for consumption on the higher side, possibly broadly we need to be able to live with an inflation of between 4 and 4.5% over the medium to long term. For next year, so basically your question is FY27, where do we see growth, right? On
Yeah.
the
Hmm.
current
Inflation. Hmm.
CPI index, I would expect CPI inflation to be around maybe 4.5% next year on the current index. Now, how the
Hmm.
new indexes weightages are different, the dynamics are a little different. It could be a little bit higher or lower than that. Right now, we're in a phase where food inflation is very low, and food inflation is the biggest determinant. If in the new index, food inflation is food items are going to have a slightly smaller weight, but inflation is going to normalize and come back to the 4 to 5% kind of mark, then maybe it'll sort of offset each other. 4.5%, I think, is probably a reasonable assumption for FY27 on a
Okay.
low
Four
base
and a
of
half. Hmm.
3.2% this year.
4.5. Yeah. Sunil, coming to you, let's also talk Fed because the data coming out of the US has clearly indicated that the job market is slowing down. Consumers are also feeling the pinch, and the case is building of a September rate cut from the Fed. Uh, do you see that scenario taking place? And would you see another two, or would you envisage two rate cuts from the Fed this year, or would that be a little, too much?
So two things there. Yeah, let me lead with saying that I do expect two rate cuts, but the reasons are not what you pointed out. You're
Hmm.
talking about the labor market and all of that. See, those are all data driven facts. You can't predict how the labor
Hmm.
market will grow, what is the impact of the tariffs and coming through, and what is the impact on inflation of the tariffs. Because by and large, from the earlier fears, the tariffs have now on an average are settled at about 20 odd percent if you take the US basket, right? So I think that that's not a big impact because of the 20 odd percent, the way I saw the breakup, 40% was being picked up by the American companies, 40% by the American consumer, and 20% by the exporting country companies, right? So our 20% increase in tariff translates then to an 8% increase in retail prices. So that's not really the a great inflation trigger. So my
Hmm.
point is very simple that whatever the data comes, Fed has to respond to that. But I believe that two rate will happen because of Mr. Trump, because of the intense pressure he's putting, right? And he's got one person to resign. He's going to put two people, new, his favorite people into that. And then
Hmm.
he's going to, Trump, and Powell has got what, 8 months or less to go, right? So I think he's
Yeah.
just going to, he's such a personality, a forceful personality with getting his way. Is that he will reject this whole board. There were rumors that he had asked Mr. Scott Bessent, who's the the Trade Secretary,
Hmm.
to go, but he's declined. But I'm just saying is that sheer pressure of that, right, will make that happen, I suspect. And the second thing that Trump is doing quietly, I heard, is that he is changing all the maturities which are coming up. He's asking the Treasury team to borrow only 1 year, clearly saying that don't go and re-borrow for a 10-year period, borrow 1 year, because definitely within the next 1 year interest will drop and you can price it back. So I think the amount of
Hmm.
intense pressure between the politics and economy. See, luckily in India, we have a talmail between the RBI governor and the fiscal policy. They both are thinking and acting together. Sadly, that's not the case. But if you ask me who will win, it is Mr. Trump who will win in his own way, brutal, ruthless, but he will have his way. So I believe that those two rate cuts will happen because it's going to put such immense pressure on the system in some way. So they have this Sanskrit saying, them done the way, whatever. He will use every tool in his
Hmm.
power. So it's in that sense. Then I would say a bet on a rate cut, and incidentally, that will also weigh on RBI. Because
Exactly.
rate
Which is
cuts
why I was thinking
between the
whether we
country, right?
one
So,
in December. Yeah.
so I think that that rate cut means what? The differential between the US interest rates and yes, it's around roughly 2%, right? So if Fed
Hmm.
does a rate cut, right, that means that differential widens. And that
Yeah.
means if the differential widens, then rupee has to weaken.
Hmm.
Now, that if you look at it purely, then the RER, real effective exchange rate, will go out of whack. Now, at that stage, of course, it also depends on whether the governor feels that we need to support exports, right? In terms of that, because exports benefit from a devaluing rupee. So one way for him is say, I don't do a rate cut, that the differential widens, which means automatically there's a depreciationary pressure on the rupee, which would help our exports, right? Is one, because
Hmm.
the current account you are saying the CAD is very good. Remittances are growing very strongly, and services exports are growing very strongly. So there's no cause for concern on the balance of payments or the credit, the CAD. So from that point of view, a rate cut from the US, right, would mean, and if he doesn't do a rate cut, would mean a gently depreciating rupee, right?
Okay, I think
Because
we lost Sunil. Sunil,
hello,
I
can
think
you?
there's some issue with your internet connection. I think we should just fix it
Suddenly,
because I think the most important part that you came when you came to the most important part, your line snapped all of a sudden.
can you hear me now?
Yeah, I can hear you.
So what I was saying was that, so if the differential is roughly 2% today.
Hmm.
So if the Fed
Hmm.
does a rate cut, right, they are at the lower than us as an interest rate. So the thing widens. So when it
Yeah.
widens, there is pressure on the rupee to depreciate,
Hmm.
right? Now there's enough reserves at the RBI's hand with $688 billion and remittances and services exports growing well to compensate for that flow, right? And keep the rupee stable. But if he feels
Hmm.
the pressure there, then he might want to act, because if imports are going to come and rise, then he'll need to feel the pressure. So he may then his hand may be tilted in favor of a rate cut to maintain
Hmm.
parity with the US. That's the only
Hmm.
thing that to look forward to for a rate cut in October. If at all,
Yeah,
Fed suddenly does a
if at all.
dramatic, 50 basis points rate cut in September itself. I'm not saying
Hmm.
probability is very
Of
low,
course,
but that could tilt the
hypothetically.
governor's hand because they also have a job of maintaining the currency at a
Yeah.
effective exchange rate, which is neither favoring imports nor favoring exports. So it's an
Hmm.
interesting dynamic. And jobs data next, all the next print will come and say NFP rose, and then everybody will see how much will get back. So rather than look at that data
Yeah.
because you're not in control of it, right? I
Hmm.
think the right way to look at it is that I would say between politics and economics, there the politician will win.
Hmm.
So I would
Sure,
be
got
on that
it.
cap.
Aditi, where are you on the rupee trajectory? Would you concur with Sunil that RBI has maybe forced, if at all, once in fact the Fed doles out a 50 basis point rate cut, not at one go, perhaps he may do it in two meetings, but once that happens, then then do you see a case for a rate cut, Aditi? I think we have lost Aditi there.
Hmm.
So okay, so then okay, fine. Sunil, let me ask you one thing about the market. We've been around that 24,600 mark. We've defended that. We've fallen below that, etc. But the markets are really waiting for one positive trigger, which is not really coming by. One would have hoped for a 25 basis point rate cut. Perhaps that would have given some bit of fillip to the bulls, but that hasn't come by, and the chances of another rate cut in October have dimmed, so to say. And of course, there's this big threat looming from Trump. Next 24 hours, higher tariffs on India. How does one navigate? Because that push is not coming through. Do you see more correction? Perhaps once those 24 hours are over, or would you say that taco trade is very much on?
No, I wouldn't call it taco trade, but I think what's happening in our market, you'll realize that is entirely the DI action which is driving the market. FIs right from the beginning of July have been continuously selling. DIs have absorbed everything that they have thrown at them and kept the markets, but the DIs have been very choosy, right? They have not bought everything the FIs have sold, right? They have been very, very sector specific, right? So IT has suffered, pharma has suffered,
Hmm.
right? So they have been very carefully choosing what they buy, right? So why I'm saying this is that now with this whole last 24 hours tariff related, one thing is that I think a lot of that bad news is in the price of those sectors.
Hmm.
So whether it's all the export oriented sectors have been pretty much hammered, and I don't think
Yeah.
there's so much more room to fall because as it is there was not much buying support there, and that's why the
Hmm.
falls happen. So from that point of view, I would say that DIIs are constantly looking at two things, right? One is where is their growth as the earning season pans out. We are still probably coming to the end of it, but guidances and all are still coming through. So they will be careful about where is the domestic growth which justifies the higher valuations. Because one thing, remember, Indian market, despite all of this, Hamara Rona Dhona, is still not cheap. Either from a
Hmm.
long-term average or from related to emerging market, we are not cheap. Why? Because our growth hasn't piped up to the extent expected. One and two, because DIS have been consistently buying 65,000 crores of buying every month from May, June, July. So 2 lakh crores they have bought. So they're not allowed the market to fall. So where I'm coming from is that so DIS now, within the current valuation situation, will look for a growth opportunity within the domestic oriented sector because there's no way they
Hmm.
can take any call on an external oriented sector because of the uncertainty prevailing.
Yeah.
So they are
Hmm.
going to focus their energies around where they see pockets of future growth coming in from the guidance. And it's not necessarily that company's guidance, it's that company's guidance. Like I'll give you two examples. Bajaj Finance said something about the MSME business. So the impact
Yeah.
was on the MSME. Similarly, L&T said something about capital goods. There's been a positive impact on the capital goods. So it's the earnings which they form their blue sky picture of India, non-export, non-related. They will buy that.
Hmm.
The second is because of these corrections happening in the external sectors, they would be stepping in to do value buying, saying, "Iske aage or how kharab can it be?" So we are close to the bottom in the correction, so I'll buy. So I expect a
Hmm.
consolidating market. I don't expect a market to crash or whatever
Hmm.
because domestic fund managers have liquidity. And when they get money from in another few days, you'll get the monthly flows numbers, and I'm sure the SIP book would have been even higher. The domestic investor
Hmm.
continues to give money to mutual funds, so they cannot keep piling up cash. So they'll keep buying. One of these two filters they will keep. Has this corrected too much, or has this growth now looking better? They'll keep buying.
Hmm.
So overall, in a market, you will see there will be a lot of sector rotation, but the market as a whole will be in a consolidating sideways movement pattern, right? And
Hmm.
any simple good news which comes from some Trump saying, okay, like he's already said something like, I never said a percentage penalty. So,
Yeah.
so it's an unpredictable person. So who knows? Suddenly tomorrow says, Mr. Modi is my friend, so I will do this thing with him. We don't know. So anything that the FIR return will take the market to new highs. But in the
Hmm.
absence of that, I don't expect a steep correction overall in the market. There could be some corrections in the external sectors as some bad news comes. There's pharma. What he said about pharma saying I'm going to go
Yeah.
to 20% tariff is very scary. So sector specific, obviously, I would not ask anybody to take a call. Stick to domestic oriented sectors from that. But do not think that the market is going to correct further and I can come then and buy. If you're a medium term
Hmm.
investor, right, stay diversified. Let the fund managers pick the sectoral calls. This is not a time for you to go and bet on a sector, unless, of course, a domestic oriented sector, there is a relative safety there, but you might miss out on the growth which will come from the bounce back in the external sector. So I would say stick to diversified mutual funds as your play, right? And I would identify two particular type of funds here: multi-cap
Hmm.
funds and multi-asset allocation funds. The reason for
Hmm.
that is that multi-asset allocation have gold and silver. See, all this uncertainty is still leading to a positive there, and a rate cut in the US means that
Hmm.
dollar weakening is positive for gold and
Yeah.
silver. Right,
Yeah.
so I
Hmm.
would say you have to keep that amount of gold and silver in your portfolio. A multi-asset allocation is best, and in these multi-asset allocation funds, they have a large cap tilt in the equity side. Okay, so you would get a mix of commodity debt and your large cap equities there, and then you choose a multi cap fund as your contra there. I mean, as your additional fund, because there you make
Hmm.
sure you're getting in your small caps, your mid caps, and most fund managers have to keep 50% at least in mid and small caps there. So you'll get a nicely balanced portfolio across the cap curve, across commodities and fixed income. So I would say in this uncertain time, these two are the ideal products to complement in your boutique, and keep it
Hmm.
there at this point until we get a very clear clarity post the festive season, which will probably be really known in the results of the January first week, October, November, December quarter that comes through. So you're going to be for a
Hmm.
prolonged period. You're dealing with headline news and somebody saying, "Oh, two-wheeler sales went up, this went up, that went up."
Yeah.
You're going to be clutching at those
Hmm.
straws to know what the EPS growths are going to be, because ultimately market
Hmm.
is dependent on strong future EPS growth. That's what we want.
Hmm. So yes, so before you bet on the festive plays, wait for the margin picture to emerge. You know how the EPS picture
Yes.
looks like, and then take a call. That's the view. Last question, really, Sunil. We have the press conference at 12 p.m. From the governor. Anything in particular that you'll be watching out for in the post policy press conference?
I think that there was no surprises on which the RBI government will be probed. He will be repeatedly
Hmm.
asked whether you mean the future rate cut, and he will again say it's
Hmm.
a data dependent answer. So I think that there might be some of the press who would ask them more about the micro details in terms of regulations, easing up. What you said about NBFCs moving to the
Hmm.
bank type of lending basis and all of that. There will probably
Hmm.
be questions around that, and he may clarify. But to me, going by the previous two times that he did the press conferences, I don't think he really gave away anything new at the press conference, which he had not broadly covered in his speech. And the copy of the speech would have been given to the press. So I'm not really expecting any undue surprises from the press conference.
Okay, not expecting any undue surprises from the press conference. With that, would like to thank you, Sunil, for taking our time and joining in. Appreciate your joining in and putting things into perspective so simply for us. And I look forward to more conversations in the future as well. Of course, after the big promise that Trump has made that he will slap a higher tariff on us, once that also happens, when there's some clarity on that, of course, we'll touch base with you that time as well. Thank you.